Hello, ladies and gentlemen, Greg McCloskey from ForexLive.com. Today's day is November 1st, 2024. Like the other major currency pairs, it is Friday and we're heading into next week. So I'd like to take a look at what we did this week and what we have to look forward to next week in this currency pair. So let's get started. All right, the high for the week was Monday, and that high came in right near this swing area right here, and it's going to remain a key level going forward. The swing area is defined by a number of different swing lows and swing highs going back in time. We moved a little bit below it last week, but then held support into the close on Friday, and in trading here this week. After closing lower, we moved up to the low of that swing area between 0.66189 and 0.66279. By the way, the 200-day moving average happens to be at that same level, and we found willing sellers against that level push to the downside. So one of the levels we can focus on next week, if the price were to go higher, is this area right through here. As long as the price remains below that level, the bias, we could see a rotation back up toward that level and a rotation back down away from that level. So that certainly is going to be a level of interest for traders going forward. Be aware of that. Now, the low for the week came in around midweek, and that came in sort of at a random level right here at 0.65357. Really has no interest or no other redeeming value from back here. So, I just put it there to show what the level was, but the price ultimately moved higher, and then we moved back down toward the low of that level and found support buyers, moved higher, moved lower, and moved higher. In trading here today, more of a narrow trading range compared to this volatility midweek. In the process, the price did move above and below the 61.8% retracement. That's of the move up from this low right here, going back to end of early August, end of July, one or the other, to the high price that we saw in the month of September. So when the price does that, I like to think that the traders traders don't really know which way it wants to go. The 61.8% is still a key level. Maybe this level right here, also at 0.6562, is a key level. But we traded above all of those levels right through here. So perhaps if I were to look at this area and put a yellow stripe right through here, indicative of this or being respectful of this level right here in the 61.8% retracement, that might be a barometer for traders, either for more downside momentum, so move below this level, and then we'll look toward the low from last week and then back down toward maybe this swing area right through here, or a more bullish bias with the move down up toward the 200-hour moving average. And kind of go with that off of this 4-hour chart as levels of significance, even though we've sort of made a mess of this area right through here with moves above, moves below, moves above, moves below. At some point, the market has to figure out which way it wants to go. Finally, I'm going to take a look at the hourly chart, because I think the hourly chart is going to give us some clues as well. And indeed, if we take a look at the 100-hour moving average, that's this blue line right here. We've traded above and below it as well in trading, especially today through the jobs report. However, in trading earlier on Wednesday, the price did hold resistance against that level, moved to the downside. We moved above it at the close yesterday, and then traded above and below, as I mentioned, in trading here today through the volatility. However, the one thing that we did do here, right here, is to hold support against that 100-hour moving average. It currently comes in at 0.65699. So the buyers are trying to make a play off of the lows. We can say that from a tactical perspective. As long as the price remains above the 100-hour moving average, we can then move toward the 200-hour moving average. Now, if we go back in time and take a look at this break and this break right here, those breaks above the 200-hour moving average around the mid-October time period were very modest and quickly rotated back to the downside. So that 200-hour moving average is going to be key in next week's trading. If the price is able to get above that 200-hour moving average, then perhaps we look toward that 200-day moving average in this swing area up here, get above that level, and we start to look toward the 100-bar moving average on the 4-hour chart, and the 50% retracement as other topside targets. Absent that, if we can't stay above this 100, if we can't get above the 200-hour moving average, then the bias remains to the downside and we'll look toward the lows. So there you have it. My technical look at the Aussie versus US dollar, taking a look at the 4-hour chart and taking a look at the hourly chart. I hope it prepares you for next week's trading. Other than that, my name is Greg McCloskey. Good fortune with your trading. Bye-bye now.